Hello, everyone, and welcome back to our weekly market outlook section with me, Nana Alexander. Nice to have you. Hope you had a good weekend. So we'll just quickly review some potential market setups for the week. Would also look at the fundamentals for the week, and especially the high impact news and what we could expect from them. Okay, so today being Monday, July the 3rd, we have, we've had one high impact news already from the Swiss franc, the CPI report, which came out actually worse than expected. So you notice that the Swiss franc dropped against the dollar. As you can see here, it lost 46 points or 46 pips already this morning. So the CPI for the Swiss franc came out bad. And then by 3 p.m. today, we'll be having the ISM manufacturing PMI news from the US. Now, let's just quickly review some of the key. This is the first week of the month, so we expect that we're going to have some high impact news toward the end of the week. So we have the Aussie rate statement is expected to come out at 4.10. That's the interest rates. We'll see how that comes out. That will be tomorrow by 5:30 a.m. So 5:30 a.m. tomorrow, we're expecting this report from the Aussie. And then on Wednesday, we have the OPEC meeting. So generally, it's going to affect all pairs. I don't expect so much volatility in the markets because this is kind of a different type of news. And then by 7 p.m., we'll be having the FOMC minutes meeting, and we'll see how traders basically gauge the sentiment. Now, remember, like I always tend to mention to you guys, I do not trade the news, not even necessarily. I don't trade the news, but I pay attention to the news so that I figure out certain times where I don't want to be unnecessarily exposed to volatility. So if I'm already in a trade, I want to manage my positions. And if I'm not in a trade, I'm looking to get involved, and I want to wait till after the news so that I can, not get caught up in all the volatility. We'll also be having the ADP non-farm employment change by 1:15 p.m. on Thursday, July the 6th. We'll also have the unemployment claims by 1:30 p.m. July the 6th, as well as 3 p.m. July the 6th, ISM PMI, and also job opening. And then on Friday, we'll have the non-farm payroll, basically the non-farm unemployment change, and also the employment rate. So lots of high impact news on the USD for this week, as it's usual with the first week of every month. And remember that we just entered the second half of the year, basically the third quarter of the year. So there would be some, we could begin to see some momentum shift, some major trend movements beginning to set up in the market. So we'll see how that goes as well. Now we'll jump over to charts. I'll show you some pairs to keep an eye on for the week and how you could potentially look at them. Now, as it stands now for one of my favorite pairs is the Aussie. Not necessarily favorite pair, but one I'm watching closely for a move is the Aussie dollar, right? So the Aussie dollar, basically you could see, where's my pencil? So basically you could see we had this. Now, overall, you could argue that the market is bearish, right? Overall, you could argue that the market has been bearish. And then we basically appear to begin to break bullish. And now you can also see we have this bearish move here, which touching into this kind of ranging market. And again, you can see the market has broken out of this range. Now, there are one of two things to pay attention here. Now, this is the range we would be focusing on here, which is this one here, basically. So as you can see, we have this move right into this kind of like a or just call it a ranging market, right? Let's not give it a name. You could see how the market came down, cleared this low, right? And then came up, cleared this high. So essentially, the market was ranging, right? So this could be an accumulation schematic, or it could be a redistribution schematic. So basically, this right here, right? This right here is the area of interest, right? So let me make it my green icon box. Right. So notice how you see, so this is the daily chart, by the way. You see how the market came into this area, began to range. So we have what you call supports, resistance, 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 resistance. So you see how price rejected or reacted from this area as price struggles to get within this area. Now, if you're looking at it from the smart money space, you look at this as your preliminary support, your selling climax, your automatic rally, your ST in phase B, also ST in phase B. This would probably be your spring, and then this would be where we have the breakout of that range, which would be the sign of strength. And then in this case, you probably be looking for retracement into a previous leftover order block, or for price to then continue to move up. Now, if it was a redistribution schematics, this price would easily break down and then begin to go down. So here's where it gets interesting, or here is where my watchman eyes come into play. Now, essentially, I'm looking at, because I can only judge what is in front of me, right? So I'm looking at this range from this low here to this high, right? How you see how price has broken out of this. We have the BOS, that's the break of structure out of this area. And then we have price pulling back down. Now, you could see that I already have highlighted an area of interest, which is this red zone here, meaning I'm looking for potential buy opportunity from within this zone. But I also understand that there's no guarantee that price has to come back down here. Remember, the main point, what I'm looking for or what I'm watching for, or what I'm expecting is not necessarily for price to come back here, but actually for price to come up here, right? So get that point in your mind. We are looking for price to come back, because if price is actually bullish and this is actually an accumulation schematics, then we can expect that price would probably want to come up here to clear this high, then continue making higher highs and higher lows. Sorry. Now, okay, let me just quickly break down into, let's look at this from the weekly time frame, right? So let me even go down to the monthly time frame. Okay, so you'd see that so here you don't really see much. We had this market was bullish, became bearish. Now this is a monthly time frame, so this is a much wider spectrum. However, you would see here that we have this, we had this breakout of structure here, and then we have this pullback here. So essentially, the market is, you can argue that it's bearish. You can also argue that it's bullish. However, we're looking at the immediate price structure within context, and this is where I'm taking into consideration. So from this low here, right, to this high, this would be the structure that I'm paying attention to. Now, the negation of all of this would be, now, if I'm right, if we're right with our analysis, then what it means is price, I don't expect the markets to come below here, right? I don't expect price to close, below this low. So what that means is the best areas would be if price comes down here and gives us a sign to buy, I'll look to buy, I'll be targeting this high. Now, alternatively, there's no reason for price to force its way down here. And even if price comes down here, there's no guarantee that it will begin to go up. There's a possibility price comes down here and then break down, in which case it means this is not an accumulation schematics, but ended up become a redistribution schematics. But we would only know that. This is why I always, when you hear me talk about things, I always talk about confirmation. You want to confirm your entries. Now, essentially for the week, I'm looking for opportunity. As it stands now, I'm looking for opportunity to buy this thing up back here, because that is my ideal target. This is where I feel the free money zone is. This is my target, right? This area here. Now, the question is, how do we get involved? One way is to, actually, one way is to wait for price to maybe come back down here and then begin to give us a push. The other way would be to go into let's say the 1 hour time frame and look for reasons to go long. So if we go back into this 1 hour time frame like this, if you're like a trend line kind of person, you could have, something like this, where you could begin to see we've broken out of the trend line, right? Now, I wouldn't necessarily want to use trend line, even though, yeah, this could very well work. But instead, I would want to follow price structure, right? So basically, you'll see that from this high, since making this high back here on the 1 hour time frame, see how price this was the low that was broken, price made a new low, right? Went up, this would be the high that forms that low. And so price then broke down again. So this would be the high. Price broke down, and this would be the high. Price broke down, that's here. And then we would have, so essentially, this move is coming from here. So the lines are becoming too much. Let me just use it. So essentially, the move is coming from here, right? So this is the high that price needs to clear for this 1 hour structure to change from being bearish to being bullish. So if the market begins to do something like this, where it's my path to, so let's say price breaks out of this range and begins to pull back, this is where we'll have the break of structure, and then we can start to look for buying opportunity to take this up, right? Now, if you're looking for, if you're looking to go micro into time frame, if you're looking at, let's say, 15 or 30 minutes chart, you might begin to see breaks of structure within here. You can even consider this its own Y-curve schematic. So this on itself could be its own Y-curve schematics. The market is fractal. You could have this as your preliminary supports, your selling climax, your automatic rally, your ST, basically your sign of strength. And then we have, you go back into leftover other block 2.0, and we have a break again. So essentially, if you were looking for buying opportunity within this area, not bad. However, on the 1 hour time frame, a break above this high here would now put buyers in control, kind of like relatively. It would, at least to give me a reason to want to look for buys, right? To give me a reason to want to look for buys. Now, just because it gives us a reason to want to look for buys doesn't mean that something like this can happen. So let me zoom out. It does not mean that the markets could not still very well, break out and then break back down to then find a trade to go up, right? This is why, like I always tend to teach you, you want to, if you get into a position, you find confirmation, you want to be able to move your trades to break even based on your own specific rules. That's why begin to move your way within context. Doesn't mean price start going where you just move to break even. Within context, as structures are formed, you want to protect the profit you make while so limiting your downside probability and increasing your upside potential. Okay. So AUD USD, will be watching for buy opportunity on this one. So remember, there would also be the AUD official cash switch statement by 5:30 a.m. tomorrow. So that could have an impact one way or the other. It could cause price to be push up or cause price to push down. Either way, there will be movement in the market, and we will be looking to follow that movement based on our structure. Okay. So that's on AUD USD. Another pair I'll quickly look at is, I think, pound dollar. So pound dollar is very bullish. Remember this one, we spoke about this, I think some few weeks ago, and exactly as we anticipated, you see how price came all the way back up here and cleared this high, like perfectly. I'm sure there were a lot of times where people were, when price was down here. You could obviously go and look at this on the YouTube channel, so I'm sure they'll have timestamps and all. We're expecting price to come all the way up here, and you see how price did just that. And so since then, I'm still waiting for opportunities to get involved in a buy opportunity. We did get the opportunity on Thursday. I didn't take that trade. But you could see the area I highlighted here for a potential buying opportunity. So let's break down a little bit into this. Look at the 4-hour time frame here, right? And see if we could spot potential trade opportunity for the week. And already it seems we can. So let's go down again to the 1 hour. So again, you see how price came into an area highlighted and began to push away. But also breaking out of this range. So we have a structural shift here, basically a break of structure. Now, what you can look for is for opportunity to look for buying opportunities if price come back down here. So this will be an area of interest, right? A zone of interest. So this will be an area of interest. Price has barely came into that area. So if we see price come into this region, you could potentially look for buy opportunity, right? Keep your stop loss just below the structure formed, and then go after this high. Now, on a longer time frame, you could go after even this, even higher highs. But first target or primary target would be this high here. So this would be the first target, and then obviously you could go after this high. So GBPUSD is a trade that looks quite looking quite good if we get a pullback. Now we may or may not get pullbacks down here, but if we do get a pullback, it's good offer opportunity. Now also keep in mind that there is no, if price pulls back right? Remember, this would be the protected low, right? So this would be the actual structure. This would be the actual structure for this particular trade, right? Which means, basically, which means that if price does not close below this low, as long as the market does not close below this low, there's also a good chance for price to come up and take out this high. That means it's possible that the market comes down and fails. It doesn't necessarily mean that the buy opportunity is gone. What it just means is, the market might decide to come back into deeper areas, and then if we get a break of structure within this area here, we could use that as a buying opportunity to take it up here. So it means you could take a trade here and that could be a fail. You could take a trade here and it could be the win. You could take a trade there, it fails, it comes down, give you a potential trade that wins. And even at that, you could take a trade here, it fails, it comes down, it also fails and break below this area. It doesn't necessarily mean that the overall buy momentum of the GBPUSD is gone. It just means that, well, on this 1 hour time frame, there's probably more liquidity that the market wants to go and take out down here, because remember, on the daily structure, this is the low that caused this high. That means this is the protected low on the daily time frame. And so even if price can very well, come back down here and then give us an opportunity to buy, and then we'll look to take it all the way to this area. Obviously, we'll be looking for the internal structure to take profits and all of those, or take partial profit and all. Okay, so that's my outlook on GBP USD. Looking for buy opportunity, as you can see, be open to look for buy opportunity on the 1 hour time frame, like I mentioned here. If we get into this area and we find confirmation, let's say we find confirmation on the 15-minute to 5-minute time frame, first target would obviously be this high, and then we'll look to take it to much higher highs. Okay, Euro USD. Similar to pound USD, very bullish, unlike pound USD. So you could see clearly we've been quite bullish, making higher highs and higher lows. Remember guys, when we talked about this one some few months ago, and we got into very good buy positions from around here, and we were targeting this highs. You can see how price came there and cleared out that high. Now, again, price came back into deep areas. And now, in my opinion, this is the new target liquidity that the market wants to go after, right? Now, now the question is, how does it do that? If we, let's say, look at the 4-hour time frame here again, and look at the internal structure, you'd see how the market switched from being very bearish, lower lows, lower highs, lower lows, lower highs, right? So price change from being bearish to being bullish, right? See how price started making higher highs and higher lows and higher highs and higher lows and higher highs and higher lows and higher highs. So we had this exponential breakout, and then we have this. So essentially, you could see how this area highlighted, similar to GBPUSD, waiting for a break. Now, unlike GBPUSD, this one is, which is much cleaner than this. For this one, you might want to maybe wait for a break out of this trend line and use that as a reason to buy. So probably watch for a breakout of this trend line and maybe see price begin to make structural shifts, because the price could very easily come back down and then begin to push up. Okay, so this is what the 1 hour structure time frame chart looks like. So I rather want to probably wait for price to break out of this, basically this trend, not necessarily the trend, but break out of this structure, so make a new higher high, right? Make a new higher high, and then use that as a confirmation to begin to look for buy opportunities. Okay, so quickly, I would also take an analysis on gold, XAUUSD. So gold has basically, I've been waiting on this one for a while, right? You could see, basically, just as you can see on my chart here, this is what I'm waiting for. Gold is one volatile pair, and I don't like to be wrong, or at least don't like to be very wrong when it comes to gold. So I'm waiting, right? I'm waiting patiently for price to probably come back down into this red this red area here. So something like, if you're looking at a trend line, it may look something like this, right? So watching for price to maybe continue its way down, right, into this area, and then maybe we have a break out of this, right? Not necessarily the break of the trend line, but then the structural shifts that occur, that occur while that happens. The trend line just allows you to see this shift in trend. But the actual thing that is of importance is the structural shift. So let's say price continues to do something like this, and then we break out. You'd see that we have that break of structure here, and then we pull back down to start looking for that, what you call break and retest. I'll start looking for that retest, which would be returning to some probably leftover imbalances or other blocks, and then use that as a reason to buy this. So gold is not necessarily, for me, it's not one to watch because this is daily time frame. This could take weeks. It could even take a couple of weeks. I could take all the month of July. But all I'm interested in is waiting to see if price comes into this area or if price begins to break higher and make new structure. But I'm not interested in selling this. I'm only interested in looking for buy opportunities. Okay. And then let's see, GBP card. No, GBP card. GBPUSD has hit our target, so it's nothing to do here. USD yen. USD yen is still on the move. I was waiting for price to pull back. Didn't get the pullback, so no trades to be taken here. Euro CHF, nothing to do. Aussie CAD. So Aussie CAD is of interest. Basically the market gave it was a V bottom, V top. Basically, you saw the way the market just did this V bottom, V top, like it was very aggressive. So as far as I'm concerned, this market is still very, very bearish, right? Very, very bearish. And what that means for me is, well, I'll rather want to be watching for potential sell opportunities in the future. So I'll probably break down, I'll talk more about this one in the coming few weeks if price begins to react, but this would be something I'll keep in mind just for the coming few weeks, maybe months, even just see if we begin to, because all I'll be looking for here is sell opportunity. The market has been bearish as I don't know what, and we'll keep looking for those bearishness to continue and deliver down further to the basically to deeper levels or deeper liquidity targets. Okay. So yeah, I think those were the main pairs I really wanted to discuss. Remember, I'm going to be having a cutting edge trading room tomorrow also, which will be for clients, funded clients, where we'll try and look at all the pairs I have here. So look at all of them and see if we can spot some good trading opportunities for in the markets that we can potentially look to take advantage of. Yeah, I had this one on my radar, and obviously price is reacting. Euro Aussie. So Euro Aussie, let me look at this. In terms of trade for the week, let's see. Okay. I can see if we can continue our move downwards. There's no real much trades to look for here. Looks interesting because you can see how price got to the area of interest and is beginning to push away. It's just I can't find a real reason to, a real confirmation to sell this, because if I do, this would be my target, right? This would be my target down here. So it would be just about looking for confirmations with good risk management to trade it as well. If you're risk adverse, if you're open to risk, this would probably not be a very bad trade to take, right? This would not be a bad trade to consider. Let's see. Yeah, it might be a bad trade. It might be a bad trade because I expect price to go up. Price might go up a little before coming back down. But yeah, we'll see. I think a better trade would be something like this. I think this would be a better trade. Yeah, so I think this will be a better trade. Entry around, this is Euro AUD, entry around 1.64 so 124. That's 1.6412. 4 stop loss around 1.643. Let's just go to 1.6440, and then you could look to go after targets as 1.629.791. So that's about a risk to reward ratio of 1:5. So if you're right, you'll be. If you're wrong, you're risking, for every 1% you risk or every $1 you risk, you're potentially looking to make 5. And then if you risk $10, you're looking to make 50 if you're right. And then if you risk 50, you're looking to make 1,000. 50, you're looking to make 250 or thereabouts if you're right. So not a bad trade setup to watch. All of this is based on the fact that the overall structure has shifted bearish twice, right? So you see EURUSD shifted bearish twice. So we had a breakdown here, right? So you see, this is what I mean. We had this break of structure here, and then we had another break of structure here. And you can see how price pulled back into the last order block, and then it's rejecting that area. So we can anticipate for price to, as a matter of fact, want to come back all the way down here. But obviously, we'll look to leverage ourselves or look to position ourselves into the street, looking for the sells as price moves downwards, right? So we'll look to capture the sells. Now, we'll definitely not be able to capture all, but we can be potentially capture a move here, take some partial profits, and let the rest run. If it comes down here and hit our targets, all good and fine. Otherwise, we move and wait for another opportunity. Okay, so that's a quick analysis or weekly market review for the week here with me. Remember, this would also be uploaded on YouTube. So if you're watching from YouTube, don't forget to subscribe, and don't remember to leave a like and a comment if possible. Okay, so now I'll take some questions before we are done. Okay, hope you enjoyed the class nonetheless.